Bear with me I'm almost ready to go. Just give me another half minute and we'll definitely get started. Right, I'm ready. Welcome everybody. Thanks very much for coming along. I'm not going to take too much of your time. I've done my preparation. I'm just going to share with you what I'm seeing in this market, so we can, so you and I can get ready for next week. The critical thing about this market is the dollar. Let's just go to the dollar first of all, because what has actually happened here is you can see this massive push up in the dollar index from the early part, second week in March through to the 20th of March. Now, if you look at let me just draw on pretty much what happened with the Dow. So while this was shooting up, the Dow was incredibly divergent, was falling like a stone and fell from 29.5 to 18,000. Most of that was done. Well, the first chunk was done in February, and then in early March to third week in March, we had this 2/3 of the drop while the dollar was shooting up. Why was that? It's because it's a liquidity issue. So many funds, some of the large funds are tied up in dollars around the globe. They're tied up in dollars. That a huge fall off in the markets led to a liquidity issue, which saw a massive hunt and demand for the dollar. So this is, we all know that the dollar is the safe haven. It's the reserve currency of the globe still. So if the dollar is shooting up, then you can expect to see the markets tumble down. Let me just get rid of this. So what's happened since? What's happened since is the Fed have stepped in, and central US government has stepped in and tried to basically put the fire out. In this massive demand slump, they committed on Friday, they committed $2.3 trillion to effectively a sort of a bailout fund. Predominantly, there's a lot of effort to try and save, to try and prop up small businesses on this side of the Atlantic, and of course, the US side of the Atlantic, and across the globe. We all know that small businesses are quite a main feature of the engine of the economy, and hence the reason why there's been a lot of emphasis on small businesses. So since the Fed stepped in with an emergency rate cut and a subsequent $2.3 trillion rescue package, the heat came out of the dollar, liquidity came back in the market, and we saw a corresponding 50% bounce in the Dow and across the indices. So where do we go from here? Well, what we've got coming up next week is we've got the main features is Tuesday we've got Chinese trade balance, Wednesday US retail sales, but the main feature of the week is going to be Chinese GDP on Friday. So with this in mind about the US dollar, let's now flip to the Dow. And this is what I'm seeing on the Dow. I'm going to put more meat on the bone in a minute, but let's just look at what we've got in terms of just pure technicals. Okay, so we had a 1, 2, 3, 4, 5 waves to the downside, and guess what? We've had a 3-wave push to the upside. So we've completed, anybody who knows anything about Elliott wave, we have completed. Well, I stand corrected. We look as if we are completing the 3rd wave of a 5 and 3 wave move. Now, this is typically what you would expect to see in any decent trend. you would see a three-wave move in the direction of the, sorry, five-wave move in the direction of the trend, and a three-wave corrective wave. So all we've seen so far is a three-wave correction. That's it. Now, if we peel back and look at some of the indicators, you can see, for example, let's start off with volume. Let's look at what happened with volume to try and get our heads around where, what you can look for in these markets. So we came down on a huge increase in volume, in sellers' volume. So that's confirmation of the trend. We pushed up on decent volume, so we had a lot of short covering into resistance. So this trend line came in from summer and autumn last year and created, so we hit the underside of that trend line and then went on another three-wave drop to the downside until we hit a key monthly pivot down there. And all the time we were selling, volume was just tailing off. It was, but there's certainly no significant buyers coming in to step in. And even on these, if you now look at these bounces are comparatively lower, lower momentum moves. So it's, in my book, this is more short covering and opportunism rather than a shift in trend. So as far as I'm concerned, particularly on the Elliott wave theory of the 5 and 3 wave move, we may have already completed the 3-wave move, but we have not got confirmation of that. So I'll come on to what could constitute confirmation in a minute. But let's just look at a bit more detail about what happened down here. So that's volume. So that's one key indicator. So for this to be significantly bullish, you'd need to see buy bars on the volume at least up into this 500,000 mark, at least. We're still only 260k contracts down there, so that's a pretty pathetic push higher compared with the panic selling and the thrust to the downside. Let's just a couple of other things to note is I've got this to 24,785 as resistance down there because we got lots of touches. It was big. That was a key pivotal point on the way up here in June last year, and it was it has been significant in the past. And the main thing that I'm interested in, if I strip this away now, let's put the fibs on the whole of this move, and you'll note that all we've done on Friday is, after that 2.3 trillion promise, commitment to put that into the system, all we've done is bumped into 50%. This dotted line here is 50%. So, like I said, there's no confirmation of a further leg down at this particular point. In an ideal world, I would much prefer this market to get up to this level up here, to come into the top of this zone and perhaps a little bit more. That would reconnect with this moving average. Now let me just remind, I think that's an 89 and a 20. Let me double check. Oh, that's a trend line, isn't it? All right, let's put a 20 on there. Let's duplicate that, and let's put a 20-day average on there. These are my favorite averages. Yeah, okay. So the 20-day average underpinned the bottom of this zone, and there's the 89-day average coming in across the top. So we're still a long way off, still disconnected from 89-day average, and now we are somewhat disconnected from the 20-day average. Markets like to come back to the mean average, so we'll come on to that in a minute. But anyway, this reading here, 25,208, is an area that I would ideally like to get short. However, if we close underneath this key level from the drop on the 12th of March, then this could 50% could be it. One of the key factors I'll be looking out for, those of you guys who are in my training room, you'll know I am a massive gap strategist, and I love the gap strategies. There's 3 gap strategies. The key one's going to be the weekend gap. If we gap down, then I'll look for the market to try and backfill. If it doesn't backfill, then I'll just get short on any resistance levels from that gap has generated. If we gap up, then that could suggest that the market has got the momentum and the push to come and test some of these level, that 25,200. So that's what I'm looking for. That's what I am interested in. So this area up here is going to be my favorite area to short, but I am on high alert for any potential gap down and an issue to do with this area here. So there I thought I would take an intra-week signal and get short and start to wind our way down. Now if we get, I think what's really interesting about these fibs is if we now sort of pull this chart over, if this is the end of the C wave, i.e. the third pullback wave after this 5 and 3 wave move, then I would call this 15,000 as a potential target. The other thing to note is we've got the earnings season upon us this week as well. We've got earnings. I think it's JP Morgan are publishing their results on Tuesday, and if you look at the earnings list, which I've been looking at this afternoon, and just grab that across. If you look at the calendar, we've got a number of key players reporting this week. Let's look at all of them. Yeah, so Wells Fargo, JP Morgan on Tuesday, and then there's a number of key businesses reporting second half. The Bank of America, that's a Dow 30 stock. Why has that done that? Okay, so apologies. Citigroup, Goldman's, that's on Wednesday. So what I'm expecting from earnings is I'm expecting dents in the earnings of these organizations, and then the real impact of the COVID-19 virus to shine through, obviously, in the next earnings season. So it's possible that this thrust could take us up here, and then we might get lucky and get a chance to short higher up. Okay, so let's just look at what might happen on the 60-minute chart. Let's tell you what, let's call up a 60-minute chart and go back and find a week. I'll tidy this up. And here's an example over here. Let me just get this set up so I can show you. Let's look at this week here. This was the week beginning the 9th of March. What we had here was a gap down. So that's where we finished on the Friday. This is where we opened on the Asian market in the Asian period. and we did eventually attempt to get up there, but initially the Monday was extremely weak. Overnight Tuesday we saw a bounce. Into Tuesday cash session, I think that is, we came back up into that resistance, and then we started to leg down. So we spent the first half of the week, well, I spent the first day of the week selling, hesitant in the second, and overnight on the third, and then we started to wind our way down. So that's how that particular week. So that's what I would look for in a severe gap down situation. I would just start to short highs, look for the highs in these indicators. This is a basic stochastic. Look for highs in these indicators if you've got the gap down, and then start to sell, because the first leg was a decent leg down. Second leg, if you held on, you would have got, I think, what's that, about 3,000 pips. So that's what to look for on a gap down. Let's look at, we actually gapped up last week, didn't we? Yes, we did. Last week we gapped up. See, these pink areas are the gap zones for each week. So we were bearish into the weekend for the previous week. No, we gapped down, didn't we? Gapped down, and we recovered almost. So we've made a lower high from the Friday. So into the Tuesday, I remember this well now. Yeah, I started shorting up here, 385. So, yeah, I shorted 385. That was it. I posted that in the room the next day, and we saw that come all gap down and more. This will be a great opportunity if we get that this week. If we gap down but then climb in the early part of the week. And again, there's the stochastic on a 1 hour chart. 1 hour chart's a nice chart to trade with a simple indicator. Be patient, wait for these strategies, wait for these triggers and signals, and then this was 2,000, over 2,000 pips from that high to that low. I took out a decent chunk of that, and subsequently on shorting these areas down here, even on these high readings. So sometimes when you get this kind of volatility and clear trends in the market, then that's the kind of thing you could do. So on this coming week, I would move this up to that close, and then I'm going to wait and see what the gap is going to do, if there is a gap. There's not always a gap. Wait and see what happens, and then start to get in the mood to start to look for a swing trade short here. So that's what I'm looking for on that one. So as far as I'm concerned, all the Fed have done by pouring 2.3 trillion, by having an emergency rate cut, is they have injected liquidity, which was clearly shown to be missing on that huge spike up in the dollar. Markets have reacted correspondingly, but now this is crunch week. If we're looking for a significant drop in US retail sales because of huge parts of the US. I don't know exactly how much in terms of percent of cities and so on is shut down. Obviously New York is the epicenter in the US, but it would stand to reason that as we start to pour through the days and the weeks ahead, the real ripple effect, the domino effect of this massive demand shock is going to show through. And of course, China have actually been drifting back to work over the last 3 weeks, I think it is, and Wuhan itself has lifted restrictions, and residents are now able to get out of the city on trains and cars, etc. And even car sales in China have already started to perk right up after a huge falling off the cliff. So don't let's all get very bearish, short everything in sight. What we do need to do, as with any part of a cycle, as with any market, we have to be very, very patient. We have to have a strategy that allows you to handle this market. And of course, because the volatility is so high, the bigger the time frame, the bigger the stop you need, but potentially the more profits you can make. Okay, one thing to bear in mind was that this last week, it was not an easy trade last week, because a lot of this was outside of the cash session. So there's the decent sell-off on that Tuesday, right back into a fib zone, right back into 22,500, and then we spent the Thursday, Friday getting excited about what the Fed were doing and seeing a rise in the volume to take us into that 50%. So that's why I'm just playing it cool until we get the Sunday open, until we start to get some of this data feeding through, but obviously as well as the earnings. So I think we're looking for yet another volatile week. And like I said, if we watch out for 23,500, if we close under this 23,500, so we're closing back under the 12th of March pivot, then I think this could fall very fast. We could, this length here was 29.5 to this 5,000. So if we see a 5,000 drop, a leg down of 5,000, that would take us to right down towards this 20,800. Okay, let's have a quick look across some of the other markets now. Let's look at gold. I'm going to look at stocks in a minute. Now, gold obviously reacted to that liquidity issue in the dollar, and we saw a corresponding fall as the dollar shot up, so the gold shot down. So if we get, at the moment, the dollar has been has seen a dramatic increase in, or will be seeing a dramatic increase in liquidity. If the dollar stays weak, then we could see 1,700 and potentially higher very soon. So we have a real sort of structural moment up there at the moment. We are continuing to climb higher, making higher highs at the moment, but we've obviously not broken above 1,700. So we've got, you can see from that chart pattern, we've got quite a structure here in that gold. So the my feeling is we'll see some short-term higher moves. I think we could potentially break through that 1,700. But then I think when the reality sets in, if I'm right about these markets, I think we'll see the dollar getting pumped up again. Now, whether we see that this week or further down the line, not sure. At the moment, that looks higher. I think the dips in the gold are potentially worth buying. There's no point in keep drawing on that. Let's look at silver. Silver's an industrial metal, so silver's already, so you can see it's way behind the gold because the industrial metal, as opposed to gold being more of a currency these days. Even the old-fashioned wedding season has gone out of gold, and it is really just more of a reserve currency now. But you can see that, to me, the fact that you can't break above that fib level is showing me the weakness in the economy. I would suggest that could drop into 1580, maybe 1600, and then I think I would expect that to roll over. Oil, there is such a massive glut of oil. There's hardly any oil tankers left that aren't stacked full of the stuff, and they are trying to store oil and float it in the hope that the price recovers and they can sell it back onto the market for a higher price. So we need to see much higher reductions in production before, and of course we need to see the US and the rest of the developed world returning to the factories and returning to the roads before this has got any hope of pushing up. So at the moment we're still seeing some very high numbers of virus victims at the moment, and the death rate is slowing in one or two parts of Europe, but overall this virus is still very much gripping the developed world, and I'm not looking for any push significant push higher in oil at the moment. I think the most likely scenario in oil is for that to come back down to these levels here. Whenever you get a big push in the market, it's whenever you get a spike like that in the markets, it's very common for what's called a boomerang, and that to boomerang right back down to where it came from. So watch out for that. If we do start holding 25, I would get interested. Otherwise, I think if the market does tip over, then expect to see 22.5, 22 again. Natural gas has had a nice push higher, although obviously we have now got into the summer months. Natural gas can still rise in this period as it anticipates the next cycle, and it's got a huge problem up here with these highs. Massive amount of resistance up there, but I think it's possible we could come and see that 20 again. But if we see a surge in the dollar again, then that's potentially going to rule that out. So a nice push into resistance. I think the path of least resistance is, I think this is probably fair value. We'd need to see a real significant drop off in the dollar for that to still rise further, I think. And what else? Let's look at, don't often look at Bitcoin, let's look at Bitcoin. And Bitcoin's in quite an interesting chart pattern. I still think I think this is going to depend on the indices. Everything's going to depend on what happens in how we open and how we start the week. I think any weakness in the indices, and this will close below 68.60 and potentially drop back down. Let's look at Elliott wave. So we've had a 1, 2, 3 wave down and a 1, 2, 3 wave up, and we're just in quite an interesting apex there. So whichever way we come out of that apex, if we start closing under 68.40, I think we could so easily come down to those lows again. If we can poke above 72, 73, I think we could come back, potentially back up to 80 quite quickly. So look at, let's go through currencies. Pound versus dollar. I think you can see what I'm going to say there. I think unless we close above, I'm not expecting that to close above 125. I think, and we had a good week. It's in line with the way the Dow's performed. You know, good strong 3 days. But if we close underneath 123.80, I would at least expect 120, and I think this could potentially even start working its way through down to parity. I think if we get a real surge in fear, if the market really freaks out by some of that data that's coming through, i.e. Chinese GDP, etc., and US retail sales in particular, then I would expect to see another surge in the dollar, the fall off in the indices, fall off in the gold, and we could end up with a repeat of the early part of March. So that's what I'm looking for. And let's look at one of the, let's start looking at some of the stocks. Boeing used to be the biggest part of the Dow. It's dropped. We are above the 20-day average, but I'm not up to date with where they are on a rescue package because they are in such severe difficulties now. And I suspect they're hanging out, they're holding out for a package to save them. So I think that's lower. Any push higher, I think will be sold into at this stage. So, but if we do see a push above these levels here, then that could regenerate the Dow. So we've got major resistance here. We look as if we're going to step down lower. But any push above 165, and that could short to medium term save the Dow. So keep an eye on that one. I keep a very close eye on how that one's opening. I'm trading the Dow open, so one of the many things I look for is to see if that is looking as if that's got a sustainable push to the upside. If coming back to the subject of volume, the volume is actually suggesting that the buyers are coming in there. I don't normally draw trends on volume. I'm just making a note of the general sort of push. This oscillator, it's called an awesome oscillator. It's on the Pro Real-Time package. If you've not got it, it doesn't matter. It's the it tends to be an exaggerated form of the MACD histogram. So if you've got a MACD, just blow up the scale on your histogram and you'll get pretty much what you're seeing here on this awesome indicator. The awesome indicator, if you're going to get reversals, then look for divergences. So at the moment we've got, this is not divergent, we've made up a higher low, so the histogram is still trying to get above the midline. So the fact we're not above the midline suggests that this is still in, as you can see from the chart, still clearly in bearish territory. So whilst I think there are some opportunities on the upside on these stocks, to me it's very short term at the moment, very short term. Let's look at let's go through some key Dow Jones stocks. There's the That's the Goldman's chart. Showing a reading. I don't know why that's doing that. It's showing a reading on 185. No idea why that's doing that. Anyway, so we had a decent 3 days. That 187 is a major pullback. So whilst the Dow has done 50%, this has not done a 50% move. Actually, let's update that. Let's go back to what we're seeing on this chart here. No, 50% retracement on this one would take you into 190. Now, I'm not looking to short Goldman Sachs. Ultimately, I would. Anybody who's bought some of these prices down here has had a good short-term bounce. If that pushed above 190, again, that's a good indicator for the Dow. Now, the stocks I like are healthcare has had a good push. I've been trading this one on the upside. This is Medtronic, MDT Medtronic. Struggling now. So I'm not in this at the moment, but I would very much like to see that dip into 87. So I'm not in it now because I'm trading waves to the upside. And I think the waves to the upside are done for now. So we had a 1, 2, 3 wave after a 1, 2, 3, 4, 5 wave down. So this has completed a 5 and 3. Surprise, surprise. So that's why I'm all over the indices. I'm looking to the indices to gauge where this market, particularly the stocks I'm interested in, could end up in the next few days and the next couple of weeks. So that's why I'm out of this, looking to get back into it if we can get back to 87.90, 87 or even lower. This is a good relative strength stock. Look for stocks that have reacted well and in line or have surpassed the bounce in the Dow. Anything that's not done that is relatively weak. It's got relative weakness. Let's look at go through a couple of other stocks in this sector. Gilead's had a good one. Bristol Myers Squibb. Now that's had a good propulsion up from 45 to it's been up to 60. So that's stochastic. I would later in get a bit more data behind us, and then love to see 48.50 on that one. Okay, I'll just go through a couple of techs. That's my other favorite sector. And that's Netflix. Netflix, obviously a lot of people staying at home watching Netflix, so that's had a really decent bounce. I think if we see 340 in Netflix, that could go back to the highs and maybe more. So watch out for a pullback in that one. And go through a few more. Let's have a look at, this is not, well, I don't class this as a tech stock. This is PayPal. A lot of shopping online going on because people are restricted. So PayPal's had a bounce. Talking of restrictions and what's been happening in the crisis, let's look at Zoom. Now, I looked at Zoom back in the last week, and that appeared to be pulling back. Yeah, so we had decent pullback. Okay, so we've seen 108. Now I've missed this. I was looking for a pullback to this area. I think this could see another leg up. Any pullback now to 110, 113, I think is potentially viable. for a return to the highs. So see if you can get, so we had a decent 1, 2, 3 wave up, decent 1, 2, we get another 3 way to the downside, and that holds. If we see we've pulled down here, that's got to close back above 125 quickly within 1 or 2 days, otherwise that could continue lower. So I buy pullbacks in the Zoom, but I wouldn't, if it doesn't get above 125, I wouldn't hang around because I'm so bearish. But this has performed well in the, whilst the Dow was dropping, this was climbing. So in actual fact, this is divergent to the indices, because when the indices were trying to reverse, or did reverse, on the 3rd week of March, this Zoom pulled right back. So this is, the Zoom is divergent to the indices. So you know, if you prefer going on the buy side rather than the sell side, whilst if the indices do topple over and start another leg down, then this is a good one potentially to buy. If you're a bear raider, then you should be tracking the retail sector. I've been looking at studying in the past is next. You can see how I marked this off up here. Very exposed to the economy, being a retail. Obviously, they've got an online business as well, but they're still very much in the high streets in the UK. If you want to short this one, I would look for. Yeah, the indices, the Dow's gone back 50%. This hasn't. There's a gap there. That would be terrific to short into that gap fill. So I'm going to keep an eye on that. But any push into that 5,000 level, I would start to pick that off on a trade like that. Right, I've been talking for 45 minutes. Anybody got any particular stocks or markets they're interested in? So whilst you're thinking about any questions, there's a chat box there if you want to type something in. So just to sum up, I'm keeping a close eye on the dollar and the VIX, the fear indicator, the VIX. Let's have a look at the VIX. The VIX has dropped right off while the markets have been climbing. There's the breakout in the VIX in February. We're still dropping. So the fear at the moment has been coming out of the markets. DAX, good, thanks. Yeah, that's a good one to look at. I trade the DAX less and less these days, but let's have a look at that. Good finish to the week. We've got a gap up there. Into 11,100 and a gap fill at 11,500, 11,600. I thought I trade it less because I just find it I find it less reliable on the Dow. I trade the Dow so much. I like the volatility and the technical moves in the Dow. I just find the DAX is a lot slower. I also find that the DAX sits back and waits for the Dow. We've had a lot of occasions where the DAX has been shorted in the Euro session. The Dow has had a lot of momentum to the upside, and it just picks up with the Dow and follows the Dow. So my attitude is, well, why trade the DAX if it follows the Dow? Why just trade the Dow? That's my attitude. And it's got a fraction of the volume, you can see the contract side volume down here is so much smaller. It's less than half the volume of the Dow, much less, and so therefore it's a lot slower. It can be yeah, just does nothing until the Dow turns up. Personal preference. If you like the technicals on the DAX and you're making money out of the DAX, stick to them. But I even stopped. I used to open the trading room for the DAX, and I stopped it because it was just less reliable. You can see that the stochastics are getting close to this top 95 line. Volume has picked up on the upside, but overall that's it's a decent three-wave retracement, and it looks as if that 11,100 and a gap fill are begging. Let's see how we open on once Europe gets back on Tuesday. But I would pounce on any intra-week sell signals up here if we get up there. So look at the weekly. Yeah, the gap is ever more evident in that. It's completely exposing the gap on that weekly chart. Interesting that we didn't retrace back to this 9th of March open, 11,000. So all that push higher over the last 3 weeks, and we've not managed to even match that 9th of March drop. Let's see if that's the same for the Dow. Yeah, you can see just how much. No, the Dow's done the same. 25,260 is a retracement to that 9th of March on that one. So we've broken above the 16th of March, or closed above it, I should say, but not managed to retrace on that 9th of March open. It's interesting looking at the monthly on these. On the monthly chart from the 09 reversal, or March 09 reversal, to the Feb new highs, we just about done a 50%. The low in the Dow was on the 50% of that move. You can see here 24.2 is a zone. So if the bears are really still in control, then we may not even get much higher than that 24.2 before that starts to leg down. And you can see the 15,350 is a zone on this one, as it is on an extension on the daily. So, but if I'm wrong, this should hold. If I'm too bearish, then we need to see this closing above 23.8 minimum, and within at least a week we need to be above 25,200 if I'm wrong. So that's why I just need to stand back, see how we start to react in the first part of the week, but be prepared to look for highs to sell as we get into the week. Any other questions? Excuse me for drinking while I still got the mic on. I know some people don't like that. So my throat's really dry. Hold on one moment. That's better. Sorry, I should have turned off the mic before. So Yeah, it's a good push higher. You can see all these extreme levels. When we're at the lows and picking off that monthly pivot, we were experiencing some extreme indicators, some tests of extreme levels on these indicators. So the clue was there. Sorry, because question, let me just catch up with these questions, sorry. That's a really good question. Yeah, how can these markets keep going up with all these countries in lockdown? It's really we're talking about the futures market. So I think there's several factors. A profit taking. If you've sat in these markets on the short side, and these markets are hitting these key pivots, and you've got significant profits in your account, we're seeing profit taking. So all the bears are closing off their shorts. To close off their shorts, they've got to buy them back. The buying activity of the bears taking profits has been played a part in these pushes higher. And in any market that sells this hard, you'll always find bargain hunters picking up stock. Now, whether or not some of those people picking up the stock will want to sit on that stock for months, maybe even years, whereas others will literally just be looking at short-term moves. So a lot of it's profit taking. Market has taken some buyer signals from the very powerful reaction of the Fed with their double-barreled attack on the bears, i.e., the emergency rate cut and these trillions they're shoveling at the markets. Also, just as China started to go back to work, we have seen some leveling off in some of the epicenters in Europe, so that the markets have taken solace from that. But that's the main reasons. It's just, for my money, it's profit taking and just traders jumping on the back of Fed decisions. Elizabeth, does it make sense to trade more in the longer term? My response to that question is, we are seeing a lot of moves in the Asian period. So there have been a lot of, in this volatility, there have been a lot of intra-week moves. So I think longer term in this volatility, to me, longer term is hours and 1 or 2 days, because these are huge moves. Sometimes you're seeing 300, 500, 600 pip moves in 30, 60, 90 minutes. I mean, in a normal market, you'd see that in a week, not a matter of hours. So, I think my answer to your question is there are definitely some overnight and intra-week moves, but you have to really pick your spot to sit on something for days and weeks these days, because of the extreme volatility that we're experiencing. So let's go back to this move over here from the 5th of March. One thing you could have done on the 5th of March is this. This is a 4-hour chart of the Dow having hit that 50%. Now, if we go back to this move over here and fib this move over here, so that's got a high of 29,520, and that first main leg down was, that's not worked, hang on. down to 24.7. Now, one thing you can see, we're hitting 50% in the overall move at the moment. The first thing you should note on this one is that on the 4th of March, we were just touching the 50% of this first leg. So one thing you can do, if you are really on top of Elliott wave and Fibonacci, one thing that I would do here is called pinball Fibonacci, pinball Elliott wave actually, pinball Elliott wave. If you take that fib and drop it to the end of the C wave, or the end of this 3-wave recovery, then look at what the market gave you there. And you'll see at the 161 extension picked up the lows on the 19th of March. So if you were wanting to stay in these markets for days and maybe a week or two, you need to pick up on these intra-week setups. And if I then bring that across, so let's update the fibs. Let's look at, let's just try and experiment for a moment. Let's look at that, the fibs on that level. That's showing the top zone, the resistance from 10th of March. So if I'm right, and this is topping out, there's that 15,000 again. There's the pinball fibs. Moved from the 5th of March to the 23rd of March. I then taken that drop and pegged it to this recent high, and that's showing a low of 15,100. So I'm actually going to keep that fibs on there. Now I would consider changing that if we start closing above that 24,000. And I would go back to the fibs on the overall move if we start closing above that. But if we start closing lower here, I would look for 21.9 as the first target, 20,700 as the second target, and so on. So if we close underneath that level there, we close underneath that trend line. Let me redraw that, it's not quite tidy enough. We close under that trend line. Here, then watch out for these levels here. And ultimately, if we make a new low, we should see 17,260 and 15,100 and so on. Yeah, I'm going to keep that 4-hour on that and see if that pans out. So coming back to your initial point, in an ideal world, I'd like to see it poke into 24, maybe higher. If you close back underneath that 24, then I'll get short with a stop above the recent highs, and then see if I can grab some of these prices on the way down. It's great questions. Thanks for those. Anybody trading any stocks? I had some questions about. Let me just look at my question. Let's look at BT a second. Let's go back to daily. Yeah, again, this is a stock that should have relative strength in this crisis. Now, it's a good, strong utility. Got to pay your BT bills if you want to stay in contact with your family and work. So that if that pulls back to 115, that could come and see 135, and any kind of recovery should fill that gap to about 150 plus. I'll update you. So this is going to be a regular slot at the moment through this crisis, this 7 o'clock Sunday night slot. I've talked for over an hour. Now the next slot is Wednesday at 6 p.m. Well, that's got a different link to that room. Let me just send you over to that now. Where is it? Let me log to my account, and I'll quickly give you that link. Well, actually, if you go here, I know I can give it to you quicker here, and then go to this link, this address. Right, tradeeasyway.com. I'll send you the link in a second. If you scroll down to, all right, what's that? Come on. Oh, that's linking to. It's linking to this session. Okay. Briefings. Is that good? Right, that's something I've got to sort out. Okay, if you're on my mailing list or part of the meetup group, you'll get the link anyway, so you won't miss out. Right, thanks very much, guys. Thank you for joining me, and I hope to see you on Wednesday at 6. Link to follow. Thanks very much. Enjoy the rest of your break and your Easter. Happy Easter, everybody, and talk to you soon. Cheers. Bye.